Good day, guys. I am coming on video to give you certain points on marginal costing. See, I'm going to teach you from the basic here. The first is you should know all the formula. Okay? You can check the formula. It is displayed on the screen here. All the formula are basically taken from the equation. This is a very straightforward equation. Sales or revenue is equal to variable cost plus fixed cost plus profit. So you can take the formula. There are around 7 items I have given here. For each and everything I have given the formula. Some items have more than one formula, and it is not a matter of choice here. It's a matter of situation and circumstance. Each formula can be used in different situations or circumstances. Okay. The first one, contribution, sales minus variable cost, or selling price per unit minus variable cost per unit, or fixed cost plus profit. PV ratio, which is profit volume ratio, contribution by sales into 100. Always the answer will be expressed in terms of percentage as we multiply by 100. BEP units is fixed cost divided by contribution per unit. The PV ratio, I will call it as the master key, because once you find PV ratio, you can find all the other questions. You can see here, for all the other things I have used PV ratio. BEP sales or BEP in rupees, you can use fixed cost by contribution per unit or selling price per unit into selling price per unit, or fixed cost by PV ratio. Margin of safety, actual sales minus BEP sales, or profit divided by PV ratio. Profit, contribution minus fixed cost. If you have direct values, you can apply, get the answer. Otherwise, sales into PV ratio minus fixed cost. And to find the sales for a given profit, you can add fixed cost and the given profit, divide that by PV ratio. Okay, these are the basic formula. Now with this, I'll move forward. I'll take examples and work out the problem. The first one, fixed cost, rupees 10,000, variable cost rupees 6 per unit, selling price rupees 10 per unit, and sales 25,000 units. You need to find the following: contribution per unit, PV ratio, BEP units, BEP sales, margin of safety, and sales required to earn a profit of 80,000. Okay. So what I'll do, instead of 25,000 units, I will change this to 10,000 units. Now let us compare. Contribution per unit. Yes, selling price minus variable cost per unit. If it is going to be selling price per unit, it is going to be variable cost per unit. So if I do this, it is going to be 10 minus 6, which is 4. So 4 rupees is the contribution per unit. PV ratio, very straightforward. Contribution by sales into 100. Contribution is 4 rupees, right? Sales is 10 rupees. Multiply by 100. That means it's going to be 40%. 4 by 10 into 100. Then BEP in units. BEP in units is fixed cost divided by contribution per unit. Our fixed cost is 10,000 rupees divided by contribution per unit is 4 rupees, which means 2,500 units. BEP in sales or rupees, fixed cost divided by contribution per unit multiplied by selling price per unit, or fixed cost divided by PV ratio, you will get the same answer. Suppose I take 10,000 divided by 4 into 6 into 10, which is the selling price, which is 25,000 rupees. Then margin of safety, you have two formula. Margin of safety is actual sales minus BEP sales, and the other one is profit divided by PV ratio. I think the first formula is more suitable here. Your actual sales is 10,000 units into 10 rupees minus your BEP sales, which is 25,000 rupees, which means 1 lakh minus 25,000 is 75,000 rupees. The sixth question and the last question in this topic is your what will be the sales to earn a profit of 80,000? See, when you need to find the sales for a profit, please take the fixed cost, add with the profit which is given there in the question, divide that by PV ratio. See, when you divide fixed cost, when you divide the fixed cost plus profit by PV ratio, you will get the sales in rupees. But instead of PV ratio, if you use contribution per unit here, fixed cost plus profit divided by contribution per unit, you will get the sales in units. Okay. So PV ratio will give you sales in rupees, contribution per unit will give sales in units. So fixed cost, it is 10,000 plus profit. Again, I have asked there 80,000 divided by 40%. So how much will it be? 90,000 divided by 40%, which is 2,25,000. So this means all the six have been found in example one. I'll move to example. In example two, I have asked you more or less the same questions. Find PV ratio, find margin of safety, find margin of safety to earn a profit of rupees 80,000 and profit if sales is rupees 3 lakhs. Okay, but the data what I have provided to you is not like the one which I gave earlier. Now the data is slightly different. Here I've given total fixed cost, profit, and the total sales. Now first, you need to find PV ratio. To find PV ratio, you need contribution. It can be sales per unit minus variable cost per unit, but you can't use it because you don't have sales as well as you have the sales, but you don't have the variable cost. Let it be for per unit or so. You don't have the sales, you have the sales, you don't have the variable cost. But you have this formula, fixed cost plus profit. Okay, contribution is sales minus variable cost or fixed cost plus profit. So I use the second one, which is 40,000 plus 50,000, which makes it as 90,000 contribution. Now you have the PV ratio. When I take the contribution in total, that means I should take the sales also in total. If I take the contribution per unit for calculating PV ratio, if I take contribution per unit, my sales must also be for per unit. So please keep this in mind. So 90,000 divided by 1,50,000 into 100. $90,000 divided by 1,50,000 into 100. Into 100, you will get percentage 60%. Then you have got the PV ratio into margin of safety, actual sales minus BEP sales. You can use this formula, or you can use profit divided by PV ratio. If you need to use the first one, you should find the BEP sales. To find the BEP sales, fixed cost divided by PV ratio. I've given two formulas for BEP sales. I'm using the second formula, fixed cost divided by PV ratio. How much is our fixed cost? 40,000. How much is the PV ratio? 60%. 40,000 by 60%, you will get the BEP sales. Just 66,667. Okay, take it here. Actual sales minus BEP sales. Actual sales is 1,50,000 minus 66,667. So what's going to be your answer here? 1,50,000 minus 66,667. Is it clear? Next question. Again, I'm asking you margin of safety, but for a profit of 80,000. which means you need not use actual sales minus BP sales. You can use profit divided by PV ratio. Profit divided by PV ratio. How much is the profit? That is asked in the question here. 80,000 divided by PV ratio. 60%, which means 80,000 divided by 60%. Your margin of safety is 13,33,333. Okay, for a profit of 80,000. Keep that in mind. Profit if sales is 3 lakhs, you're going to find profit, but I've given you the sales. So when the sales is given, take that sales, multiply it by the PV ratio, then subtract the fixed cost, you will get the profit. Your sales is 3 lakhs. Your PV ratio is 60% minus the fixed cost, which is 40,000. One lakh 80,000 minus 40,000, 1,40,000 rupees. Done. I asked 4 questions and we got the answers for all the 4. I'll move to the third example. Third example is slightly different because this is called as a 2-period model. I have given sales for 2 years, total cost for 2 years, right? Let us assume, see, I didn't give this to you. I didn't give this to you. Okay, this is the sum. Now, in a 2-period model, you can use the same formula to get all the answers except for the PV ratio. But once you find the PV ratio, all the other things are easy. But to find PV ratio, you can't use the same formula or the existing formula I gave you because it is for a 1-period model. So when it comes to 2-period model, the formula for PV ratio is going to be change in profit or change in contribution divided by change in sales multiplied by 100. As usual, your answer will be in percentage. Now tell me, what can I take? Can I take change in profit or change in contribution? The sum does not have profit or contribution, but I can find profit. Profit for the first year is 10,000. For the second year is 30,000. And the change in profit is 20,000. From 10 it went to 30. Similarly, change in sales from the first year to second year is 50,000, 90,000 to 1,40,000. Which means I can use change in profit divided by change in sales. 20,000 divided by 50,000. Multiply it by 100. Okay. 20,000 divided by 50,000. Multiply it by 100. This is 50. Equal to 20 divided by 50. Let this be in terms of percentage. 20,000 divided by 50,000. It's 40%. PV ratio is 40%. But to find the BP sales, I need fixed cost. So you need to find fixed cost. To find fixed cost, use the formula sales into PV ratio, okay, minus profit. See, to find profit, we use the formula sales into PV ratio minus fixed cost. So from that formula, I have taken this formula. I've just replaced, I've just interchanged fixed cost and profit. That's it. But which sale should I use? I have two sales there. You can use any sales. You can use the first year sales or the second year sales. If you use the first year sales, please use the first year profit. If you use the second year sales, use the second year profit. Okay. First year sales is 90,000 multiplied by PV ratio 40% minus the first year profit 10,000. $26,000 is the fixed cost. Once you get fixed cost, you can find BEP sales because BEP sales is fixed cost divided by PV ratio, which means fixed cost 26,000 divided by PV ratio 40%, right? Which is 65,000. Your BEP sales is 65,000. The next question is margin of safety for both the years. For year 1, year 2. The formula is actual sales minus BEP sales. So I'm going to take the actual sales, that is 90,000 minus BEP sales 65,000. This is for the first year, which means my BEP, my margin of safety is 25,000 rupees. Right? Similarly, for the second year, it is going to be 1,40,000 minus 65,000. So 1,40,000 minus 65 is 75,000 rupees. So margin of safety for the first year is 25, for the second year is 75. Profit, if sales is 1,80,000, you're going to find the profit. They have given the sales. Take that sales which is given, multiply by the PV ratio and subtract the fixed cost. Okay. So I'm going to find profit here, sorry. So here you can see the same formula, fixed cost is equal to sales into PV ratio minus profit. Profit is equal to sales into PV ratio minus fixed cost. This fixed cost and profit is just interchanged. Okay. So what's the profit here? Sales into PV ratio minus fixed cost. 1,80,000 into 40% minus 26,000. It is 46,000 rupees. Okay. Clear? Then one last example. This example is actually called as miscellaneous items. See, here I'm going to give you a very small sum. I'm asking only 2 questions, but the answers cannot be found directly by substituting the formula. This sum tells margin of safety is 20,000, which is 20% of sales. Fixed cost is rupees 20,000. Find the PV ratio and the sales required to earn a profit of 2 lakhs. What we'll do first, you can't find PV ratio using contribution by sales into 100. Other, with the information available here, try to find out whatever is possible. Okay, so I'll find the sales here. Sales is very easy because margin of safety is 20,000, which is 20% of sales. So how much is sales? Sales is 20,000 multiplied by 100 by 20. It is because 20% of sales is margin of safety. How much is 100%? Okay, so that means your sales is equal to 1 lakh. Now you can check. Margin of safety rupees 20,000 is 20% of sales. Yes, on sales of 10 lakh, 1 lakh, 20% is 20,000. So perfect. Then Find PV ratio. To find PV ratio, what you do, you first find BEP sales. To find BEP sales, the formula is actual sales minus, sorry, I'm going to use margin of safety. Margin of safety is actual sales minus BEP sales. Okay. With this, I'm going to find BEP sales. That is because margin of safety is 20,000, which is equal to actual sales, which is 1 lakh, minus BEP sales, which we don't know. So BEP sales can be pushed over to the other side, and 20,000 can be pushed over to the right hand side. So 1 lakh, the plus 20,000 will be minus 20,000 now. As a result, your BEP sales is 80,000. Now we got BEP sales. That's great. You can find PV ratio using BEP sales. I'm not finding PV ratio directly here. PV ratio is fixed cost divided by PV ratio. Now I need to find PV ratio. So take the PV ratio to the other side, BEP sales to the right hand side. So PV ratio is equal to fixed cost divided by BEP sales. How much is your fixed cost? 20,000 divided by BEP sales, 80,000. And as always, multiply by 100. PV ratio should be in percentage, which is 20,000 by 80,000 into 100, 25%. So I have found PV ratio at last. Okay. Sales required to earn a profit of 2 lakhs. Again, it's a straightforward question. Sales required is equal to fixed cost plus profit divided by PV ratio, which was already given to you and already we have worked also. Fixed cost is 20,000. Profit, how much is the profit they have asked us? 2 lakhs. Okay. So profit is 2 lakhs divided by PV ratio, which is 25%. 8 lakhs and 80,000 rupees is the answer. Okay. I think this session might help you to some extent in marginal costing. Let us meet in some other class, some other time. Thank you.